Good afternoon. Obviously not the best afternoon, but a good afternoon. Welcome to the Big Earnings Show. Today, we are forced to work remotely due to the effects of the pandemic and a lack of internet access at our office, which we happen to be the only ones habitating. So very interesting enough, then my lunch didn't come. Thank you, Uber Eats. So you will be dealing with it, a very exhausted, somebody who drank too much this week of Tesla tequila with me, Kevin, and somebody who hasn't eaten all day. As your host, I'm Ross Gerber. Welcome to the Gerber Kawasaki Big Earnings Show, one of my favorite shows because we get to talk about all the earnings that are coming out. Here we are with the best earnings we've seen in like a generation, and a correction comes and everybody's in panic mode. So we're here to help you calm down and help you understand what investing is all about. And investing is about thinking about the long term and investing in the best companies in the world. So let's start with Tesla, guys. You know, everybody's heard me talk about Tesla. I was on last night for 2 hours with Callie and, and me, Kevin, talking about Tesla and really what an amazing opportunity. And I think a lot of people
Ross, before you start with Tesla, don't you feel like the financial media is jumping the shark in a way with all these companies having these amazing earnings, yet the headlines are negative?
They can only sell negative. The financial news can only sell negative, and that is what they think people want to buy, hence why we're so popular. You know, the people who are putting out real information, and especially with a positive bent, are obviously in high demand because the negative selling tool is plenty. But when companies are earning, let's say 100% more than they made last year, there is only one headline, but the headlines I read around Tesla were all positive, which I'm sure they were begrudgingly positive.
So let's start there. Why are they down 100 points at the close today?
Well, I think that there's the sell the news thing. And I think there was a very unrealistic beat expectation with Tesla. Like some people were thinking they were going to do $3 a share, but there was no economic path for them to do that. And then I think people don't understand Elon, and it's happened many times. They just don't get it.
What about I feel like people were a little spooked by the supply chain?
Just slightly. They delivered a record amount of cars this quarter, despite the supply chain issues. Elon's got to temper the excitement. They don't know what's going to happen with the supply chain in the next 6 months, but Tesla's executed beautifully during this period of time. And what he really said was that actually they're not even producing at full capacity because of this.
Yeah.
So if they're doing these numbers with the supply chain issues, imagine when this alleviates, Tesla's numbers are going to just keep going up and up. But once again, investors have to think about a year from now, not what the issue is today.
Do you think humanoid robot discussions are getting people upset?
The dancing robot.
Well,
the robots. He's all in on the robots.
It's thrown everybody for a loop because, it's funny because ever since we were kids, we fell in love with R2-D2. And R2-D2 was a wonderful bot. And then they had CP3O, which I thought was an improvement over R2-D2 because of the limitations of the droid. Rolling over the sand seemed very poor. So the walking droid had many issues as well. But if you remember, CP3O's real strength was his ability to analyze stuff. And we grew up with these robots and bots. I don't understand why anybody's surprised that it's actually happening. When I was a kid, we watched Star Trek. And Star Trek, there you go. Right? So Star
Wrong
Trek.
Wrong you got to get C.
Both. You guys remember
C3PO. C3PO.
That's R2D. CP.
No,
C3PO. What does that stand for?
It's just a model
sure
number.
Some geek probably knows this, but I'm like, when Star Trek, they had the first cell phones on Star Trek, where how they were like, beam me up, Scotty, and all that, and everybody was like, oh, when I was a kid, nobody thought there would be a cell phone kind of thing. And one of my girlfriends from long ago's mom worked on the Star Wars set. She was in hair, and so she had these old Star Wars memorabilia, like this phone. And I remember laughing at this was long ago, when cell phones were actually new, going, wow, they actually invented one, and it looks almost the same. And it actually did. And so I don't see why people are surprised that the sci-fi things we grew up with are actually happening. This has been happening for a long time.
Well, we had 70% growth in automotives, and all Elon wanted to talk about was robo-taxis and robots. So, that's Elon being Elon.
He's never. So what do people expect?
He's always going to do that.
You want a Tim Cook? You want a Tim Cook call? You got a Tim Cook call today.
Yeah,
get yourself a donut and a pillow, and you can listen to Tim Cook talk about nothing for an hour. So I don't understand what people want from Elon. It's like the vision is massive. He lays it out for you. And then everybody gets scared because they're like, oh, he's going to build a robot.
Yeah.
I don't know.
I think this is a disappointment around the Cybertruck not being produced, which we knew. I mean, it's kind of, you have to understand that if you have a new model, it's gonna take some units off your delivery. It's gonna have to ramp. It's gonna take a lot of work to get it right, and people are disappointed.
Tesla's come on, time. They've never delivered a car on time.
Look how sweet they look.
I know. That's what I told the Cheddar, Kristen on Cheddar is like, do you like the design or is it, polarized? And I said, it's definitely unique and I actually like it. But if I was single and I pulled up to pick you up on a date in this thing, don't tell me you wouldn't think it was dope, And she was kind of like,
Joe Rogan was all over it this morning, saying,
"Oh
no,
in
person."
We're not going to mention Joe Rogan here.
Well, listen. Joe Rogan's getting too much criticism. He's a wrestler. He has a podcast. If you listen to a wrestler who has zero education, who bangs his head into a wall for scientific information, like what the fuck is wrong with you? He's entertainment. He's comedy. He's really funny, actually. I've seen him live, like stand-up, and I think he's genius comedy. But he's a fucking idiot. I don't think that's like – and he'll tell you that. Like, he's not – so, like, let him – like, I get he puts controversial people on, and that's America. There used to be this guy, Louis Farrakhan, who used to go out and spout hate speech every day, and it was, like, super annoying. But that's America. There's a guy named Donald Trump who goes out every day and spouts hate speech. That's America. You're allowed to do that.
Okay, well let's get back to earnings.
Yeah. Is there any earnings? We got no earnings yet
coming out.
Well,
we're waiting for Apple.
Let's talk about Microsoft. Wendy, I know Wendy's got Microsoft numbers.
All right, Wendy.
Microsoft had an amazing
quarter. Tell us about Microsoft.
Microsoft, amazing quarter, like always. They beat, so earnings per share $2.48 versus the expectation of $2.31. Revenue $51.7 billion compared to the estimate of $50.8 billion, so $1 billion beat. Increase of 20% year over year. Biggest thing was intelligent cloud, so Azure and all of the Azure space. It was up 26% this quarter. And they did mention a lot about gaming. So we all know they have this big acquisition of Activision, $68.7 billion deal. Gaming revenue this quarter was only up 8%, which they considered to be a little disappointing. But a lot of what Nadella is saying is that they're moving into, he called it on the earnings call, Internet 2.0. So that is the metaverse. It's everybody now creating their own world within cyberspace.
Yeah, their digital world.
Yeah. So he says 1.0 is when everybody went and created their own web page. So you had MySpace, or what did we have before that?
Friendster.
Yeah, something like that. But everybody made their own little page in their own little world. Now everybody is going to create their dimensional world in the metaverse. And
Wendy, are you in the metaverse? Do you play in the metaverse at all?
Do I know? But he mentioned part of it is things like Minecraft, which
but your kids are in the metaverse, right?
Kids are definitely in the metaverse.
Yeah, and the amount of money that kids spend just to create their skins, to create their identity.
How much are your kids working you for this stuff?
Well, they have their own money. Chinese New Year's is coming up, so they're already earmarking how they want to spend their money.
I don't think they're out in the yard working for money. My kids will only accept Roblox as their currency of tender for activities. That's how my kids are. I don't know what your kids are doing. Are they Chinese New Year's? I mean, they got to wait once a year.
They accept dollars. My mom did ask if the Tooth Fairy brings Bitcoin, to which I said, unless you're the Tooth Fairy, no, my kids don't get Bitcoin.
Right. I mean, it's like 0.001 Bitcoin. Here you go, kid.
Well, I don't know if she intended the Tooth Fairy to bring a whole Bitcoin.
A whole Bitcoin?
That would be nice.
I'd give them a whole mouth of teeth for a Bitcoin.
Right.
You know?
So they get US dollars.
So Wendy, like, Microsoft's really broken into a few different pieces, like the company. So you got the Metaverse piece, right? And then you got this like LinkedIn sort of like business piece. And then you've got the core business with its like Word and Excel and then you've got cloud, right? Which is also doing really well. What sticks out to you as the area of the business they're doing the best?
So it is intelligent cloud. That is the biggest growth, and it also is the biggest driver of business. Because
what's intelligent cloud versus cloud?
So it is Azure trying to take your business data and then give you advice about how to run your business.
Right. So like when you're using all their services.
Yes. So you incorporate all of your teams and all of the business software that's internal, and then you connect it with everything that's happening externally. And some of the examples they gave were things like intelligent cloud could predict whether you need to address a supply chain issue. It will figure out by communicating with these different companies whether you need to order this ahead of time.
It's funny.
It's like analytics based kind of thing.
Yeah. There's a whole breakdown on the cloud services that because it's not like AWS, where AWS is very cut and dry on their cloud
Yeah, it's kind
side.
of just like a host, you know,
right?
Just like host stuff on.
But like, listen to all the businesses that they have. Azure and other cloud services, dynamic products and cloud services, Office 365 commercial, Office commercial products and cloud services, Office consumer products and cloud, search and news advertising, server products and cloud.
All right, you made your point. You got it.
But see, that's the flywheel.
Let's talk about gaming in a second.
Yeah.
Because their core business, like yesterday I did a Teams meeting, and I was sitting there saying to the people, it's amazing how bad Google Hangouts is and how quickly they integrated Teams into being an effective product as part of their suite of services. And it works pretty well and easily, like Zoom. It's not as good as Zoom, and we use Zoom, but like their ability to integrate this technology effectively was pretty quick. And I like Teams, you know?
Yeah, the thing that sticks out to me about Microsoft is that they're willing to make those big acquisitions. They're willing to go out and buy Activision to add to their suite of products. Whereas you compare it to a company like Google, and they're going to try to recreate it from the ground up.
Yeah, like Apple.
And then you have Apple, who just won't buy anything.
Anything.
Tim and Tim.
Yeah.
Tim and Tim.
Tim.
Good point. So let's talk a little bit about the gaming part, because that's the part I'm most bullish on. You can call it Metaverse or you can call it what you want, but by taking down Activision, they got some of the best properties in the world, whether you call them Metaverse properties or gaming properties like Call of Duty and Warzone, as well as Warcraft and many others, because they also got the mobile gaming unit that's King, which Activision bought a few years back, and with that comes Candy Crush and the mobile piece. So all of a sudden, Microsoft got this like mobile piece, got some of the just key cash flow franchises of all time. And then they add that in with their Minecraft piece, and then their Xbox Live and piece, the hardware piece, and they bought Bethesda. And so they've got like all of a sudden, like literally the coolest gaming company I've ever seen. So the fact that they got Activision for cash at a reasonable price, the market has missed this completely in my mind. And now we're in a correction, and Microsoft got a little bit of a boost, but now we're in a correction. So the market really hasn't fully absorbed the dominant position that Microsoft's going to be in one of the best industries you could be in moving forward. And that's why I'm so bullish on the company.
Hey, for Microsoft, the acquisition of Activision is basically the free cash flow for 2021.
Right.
So,
it's like,
yeah.
And they earned zero anyway.
They got a cash earning
1%.
zero.
Right.
Yeah.
Well, maybe 1% now. Let's get excited.
In a year.
Right, in a year. But like, think about companies like Apple and Microsoft and Google that have all this cash on the books, like Warren Buffett does, $100 billion on the books. It's literally a drag against earnings, because if the $100 billion just earned 5%, it would earn $5 billion of pure profit to the company. So the fact that they're taking cash and putting it to work is even more efficient for Microsoft for exactly the reason you said, because the cash flow is so high there.
Yeah,
and it's like putting cash to work gets an immediate return because Activision's profitable.
Yeah, and Activision, obviously given the problems Activision's had at their company, with their management and all the stuff that's going on there, Microsoft was actually able to get a pretty good deal. I mean, at $90 or $95, whatever it was, it's actually below where the stock traded before all this crap happened with Activision.
It was a great deal because Bobby Kotick was the worst CEO ever, and he was able to get out of the business with some pride left in a way that was decent enough for shareholders. And it was a win for Microsoft because they just pared down management. They're going to put in their people, and they're going to be 100 times better than Bobby Kotick, than the people who are there now, because they've lost a lot of people over the years because of Bobby and because of the horrendous work environment that he created. So there was sort of this collective like, yay, when Microsoft bought them because they're so good with ESG and corporate governance. So, it really is a great opportunity because the stock should have been much higher anyways. And I think the future of Activision looked a lot less bright under Bobby. And now everybody wants to come work at Microsoft Activision.
Yeah, and now I'm curious, as when we talked about Metaverse, is if Activision in the gaming sector somehow intersects with they have the HoloLens, which is AR/Metaverse.
Yeah, we haven't talked about that.
Are we going Xbox plus Activision plus HoloLens? Does that equal the next level of gaming here?
Absolutely. Totally. HoloLens is very popular in enterprise. So I think they will use the resources, and I confirm this, the resources they get through Activision for building these universes and so forth to kind of get better content or better tools built for the enterprise. So
the reason, sorry.
Go ahead. No, go ahead.
I was going to say, the reason we're talking about Microsoft is it's a top 3 holding at our firm. So we've got Tesla, NVIDIA, and Microsoft as sort of our top 3. And so we really look at this as like the dominant players in the technology business. So when you invest with us, you're getting these big cap giants that are really dominating. And Microsoft continues to be so well managed under Satya Nadella. It's just amazing. He's done so well.
It's like a tech fund in and of itself.
Google it came out with saying that they're going to have another VR AR project as well. They say it's called Project Iris, and of course it's not going to ship till like 2024. They're saying that like the early prototypes look like ski goggles almost. So
I don't want that. I want glasses.
I don't know what you want.
I'm a consumer. I can tell you what I'll buy. I'll show you my junky Oculuses in the corner in the trash can again. Hey Brett, what do you got for earnings coming out? What's come out? You said Visa came out.
Apple hasn't come out yet. Visa,
right, they come out at 1:30
a few minutes ago.
Robinhood's down big after hours.
What did Robinhood report?
I don't know. I just see that they're down 9%. Let's see here. Revenue, first quarter revenue, $350 million, down 35% compared to 2021. Holy crap!
You can't sink people with Doge and options.
Oh my God!
They did say that they had monthly active users up to 17.3 million, which was up. 40%.
Yeah, those active users. Somebody doing a withdrawal. It was like we had 17 million.
How many Robinhood users do you think are getting margin calls now?
Yeah.
On the margin they didn't know they had.
Yeah.
Well, I think, unfortunately for these people, and I don't.
Robinhood's under $10 now.
Yeah, it's down 86% from its high.
It's worthless. It's a worthless
company. I think the only value it is, and I think we talked about this last week, is one of these companies is going to come in and is going to buy them and basically just poach the clients in.
Like
and,
the Wealthfront deal.
We saw UBS exactly yesterday. UBS bought Wealthfront. We knew that was always in the making. Somebody was going to acquire them. Now we have
Yeah, it was
Robinhood.
like they lied. Like Wealthfront was just a liar the whole time. Like, oh, we're for the independent person. Oh, we're for the individual investor. Oh, actually, we're just building up a big list to sell to the big, ugly, bad Swiss bank. You know,
My God.
and like UBS is like, yeah, you know, we just want to like poach high net worth clients.
Listen to these numbers.
You know.
Yeah. Revenue came in at 365 million for the quarter and a net loss of 1.32 billion.
Wow. They suck. Not that we're surprised. I mean,
no, definitely not.
But that's a horrible performance.
That's tough.
And I was trying to explain to people who are into Robinhood why their business model doesn't work. And they're now proving exactly my point. If you lie about commissions to people and you rely on plying people with high commission options and margin accounts, and then the market turns on them, what happens is there's no clients left. Yeah. See, they forgot the point about if you're a gambling app, you always need new gamblers. And so what the other companies do is they always offer promotion to get new gamblers, So the problem is the gamblers always lose, and then they move their money. And that's what's happening to Robinhood. Clearly, yeah, gamblers have lost, and they don't want to be involved.
They missed their users numbers, like let alone, they were supposed to get another 2 million users, analysts thought, and they couldn't even do that. So they couldn't even attract the gamblers to the platform anymore because people have already been burned so many times.
Listen, it's the same pattern every time, and it's the same pattern every time, and it makes me sad too because and many people are reaching out to us. So to people's credit, many people are reaching out to us because they tried Robinhood, they tried the crack, and now they want to build a financial plan. It's going to take them a little bit of time to figure out, like, hey, you can't get rich quick. YOLOing into Tesla options today might make you money, but that's not how you actually build wealth. And I think people are now realizing that the crack isn't good, and it's time to actually, look at some blue chip stocks and build a real portfolio. And we're happy to help people do that. Robinhood users do that. And we have many, many that have come over. But I think the fallacy that was in, most of the end of 20 into the end of 21, that this was the easiest game in town and anybody could do it, is now over. And unfortunately, firms like Robinhood are the ones that go down the tubes.
Yeah.
What else we got, Brad?
Let's talk about there. Go ahead, Tim.
Yeah, let's talk about Netflix because it feels like Netflix started this kind of negative wave of selling because of earnings, even though they had some really awesome earnings. I think that they beat both on the top line, the bottom line. They had about 8.5 million new subscribers for the quarter.
Yeah, what was the bad part of their report?
I think
guidance.
They guided that they
they do this every time though. They guide every time low. They have no idea how many subs they're going to get. We know that.
Yeah. They don't. They really don't. I mean, obviously.
How do you know how many people in India are going to sign up for Netflix this quarter? It's hard. It's hard to model it.
There is a correlation between new content and subs. There is not a lot of new content coming for this quarter. I think that's what people are worried about. And obviously, COVID has hurt productions. And also last quarter was Christmas. You had Don't Look Up. They had some really good stuff coming out. So
I think they have
the only stuff I watch.
Content. They have great content.
Yeah,
and we talked about this.
They just came out with the Kanye. They have the Kanye show right now, trending everywhere. Just when you think, oh, what else can they do? Boom, another show. Everybody's talking about.
If you're selling Netflix because of a quarter, or a guidance for over 3 months, then you really don't know what the business looks like.
Right, but see, Hatem, what we've learned as investors in this market, this generation, is that everybody sells off after earnings. Okay, so stuff might rally into earnings, but it seems like almost everything sells off into earnings. I don't know why the computers are set up that way now, where it's like everybody sets maybe some expectation that isn't achievable and then it doesn't make it, so the computers just sell. But it creates opportunities for investors. And this is a strategy we've been using for a year now, which is we buy these stocks after their earnings sell-offs because we look at the actual fundamentals of the company.
Speaking of fundamentals,
really well.
Netflix's forward PE is now 23.
Yeah, I mean, you got to buy the stock.
I remember when
they have an optics problem. they probably should not have announced their price increase like 2 days before their earnings. They should
Isn't
have
that
done
a
it after.
positive thing? Isn't that a positive thing?
Why
though?
is that? Why do you say that?
No.
Well, I think it telegraphs that their sub number will be down.
Yeah,
because
like they were
they're
sort of
increasing
like,
prices.
oh, don't worry, we're going to make more money.
Yeah.
Kind of thing.
So even if they make more revenue, it's that they're trying to draw from a well that is running dry.
Well, let's,
So this was the question I posed people, and you guys can answer this. Okay. There's like 2 billion people on Facebook. So let's say 2 billion people with good enough internet access to check the horrible news on Facebook, right? And so like there's about 225 million Netflix subscribers, and there's a little bit less when you add up all the different subscribers, many of which are the same at Disney, okay? But let's say you have 225 million people. What is the TAM? What is the total market that they're really addressing?
There is a billion households.
Billion
households globally that
have broadband.
Broadband, internet good enough for streaming. So arguably Netflix can quadruple its subs number over the
Well, they're not going to get every single broadband home in the world. That's clearly
that's going to increase too, right? More people will have internet.
So the question is, if they have 25% of the world, the real question is, how do we get more people broadband access, right? Because there's 6 billion people in the world. So that's one solution, right?
We can ask Elon for that.
Right. But as more people have better internet access, it certainly opens up more markets for Netflix. And because they have international content, those markets are already open. So it's
I think that's the brilliance of Netflix, right? They're the only content maker that was successful at adopting international content.
Oh, yeah.
Markets, right?
Yeah.
And the cost structure is much better.
You and I were talking about this last week, Hatem. The last 4 actually, now that I think about it, the last 4 shows that I watched were not in English. Okay.
Yeah, me too. Me too.
I watched an Israeli show. I watched Squid Games. I watched Narcos Mexico, and I watched Money Heist. Okay. I haven't watched an English show.
Technically, Narcos Mexico is in English.
I mean, most of it's in Spanish. Most of it is in Spanish.
Right.
Part of it is in English. It's like 75% Spanish.
Realistic is what it is, right?
Yeah. But
boy,
that's the beauty of their model.
Better?
Yeah, my Spanish has definitely improved, and now I can understand it a lot.
Pretty good now. Yeah.
But their numbers and their metrics and going forward, like Netflix has always traded at like a 100 PE to 200 PE in the past. And I always go back to what you tell us, Ross, that when we were starting in this, eventually every company becomes a 20 PE stock.
Right.
And that always stuck with me. And Netflix is now at that spot. But they're still growing subscribers. Their revenue and their earnings are increasing more rapidly.
They're growing faster than 20%.
Correct. And yesterday, whatever, you had Ackman come out and say that he's increasing a big stake in that. Like,
I don't trust Ackman at all.
Huh?
Why not?
Because he burned everyone's trust in the pandemic. Are you kidding me? Whatever he's saying to the public, just assume that he has a plan.
Oh, that's not accurate.
He bought the shares, though, but he already bought them.
That's only his hedging. That's only his hedging and stuff.
Okay, maybe he's pumping his bag so he can dip out. Who knows with this guy?
Stocks. He owns 5 stocks. We know because he has to do a filing. He bought 3.1 million shares. That's what happened. And he disclosed it in a filing. This is a big piece of news. He only buys a few stocks. Okay? That's his thing. I think he's a genius. So
pull up his interview on CNBC of him crying.
I remember at the bottom of the pandemic.
I remember going to the bank and pulling out cash myself.
It
was the weirdest
one of the best
interview
trades of all time.
Yeah.
He pocketed $1 billion on
by burning the public too.
He doesn't fucking care about the public. He's a hedge fund. He's a hedge fund.
He doesn't care about the public.
Friend, Brett?
But
you think he's here to come wipe the sweat off your
brow?
brow?
He's not our friend with Netflix. I'm saying
he lives in the tallest
Apple
building
just
in New York,
came
in the
out.
biggest place in New York. He doesn't care about the public. He doesn't care about you.
All
right, what's Apple got?
All right, here's why we're here.
It's spitting. It's up immediately. It's just spitting out revenue numbers right now. EPS of 210. Not sure what the consensus was here.
Come on, Apple guy.
$34.63 billion. It's pretty good. $123 billion in sales.
I mean, these are just huge numbers. I don't know what that means.
Crazy.
Yeah, hold on. It'll give me some comps in a second. They're expected to sell around 40 million iPhones this quarter, so that'll be an interesting thing to see if they got close to that or over it, considering all the supply chain issues.
I have the consensus estimates at 189 and 118 billion,
and they came in at 210.
Yeah.
Wow.
Yeah, so they beat.
Yeah,
they beat.
Yeah,
I mean,
Apple's like
between
like
Microsoft and Apple.
Like
I mean,
pie.
like Apple and Microsoft together, like they really just like you can't not own these companies. I mean, they're the two biggest. Obviously, we all know that, but the ability that they have to keep people in their system is not like anybody else. Like Google is great, and Google has their cloud, and they have their search business and that. But talk about like sucking people into their system and never letting them escape, essentially. And that's what these two companies have done.
Well, it's the ecosystem strength argument, and it's sort of what I think all companies strive to achieve, no matter what industry they're in, where they build a community and they build an ecosystem, and then ideally it becomes just a part of your life that you can't live without. Good companies do this, and it can be companies, it could be consumer product like Nike, like I just wear Nikes. They're my favorite shoes, and that's what I wear. So it's like you sort of like become this customer, but then it's like, what do all the other things the company does to keep you as a customer? And that's what Apple, Microsoft, Tesla, the great companies do, is they draw you in and then you just can't leave.
Well, they've done a study with teenagers, and when you get the text message, the group text message, and there's a green bubble, you get peer pressured to go back to the blue bubble.
We do it to our friends.
I actually harass
kick out the people from the group.
Yeah,
we kick them out.
People.
We have to kick them out because they ruin everything about.
By the way, I have all the I have all the numbers if you want them.
Let's go. Let's go.
So here it is, Ross.
Run them down for the
EPS 210 versus 189. Nice. Revenue 124 versus 118 estimate. iPhone revenue 71 billion versus 68. Services 19.5 versus 18.6.
They crushed it.
Other, like literally everything they beat.
Categories.
iPad is the only thing they didn't beat on. iPad is down year over year.
Bought iPad.
Gross, ready for this? Gross margin 44%.
Whoa, that's a big number.
Yeah.
So what's year over year change in EPS from last year?
Year over year 25%.
So 25% growth in Apple.
Yeah.
So it supports a 25 PE.
Yeah.
Easily.
For sure.
I remember when Apple used to be like the 18 PE, 16 PE stock, and we're like, this is just wrong. And Tim was buying back stock like crazy. Yeah. Now it's like a 25, 30 PE stock.
Well, they became a services business. That's what changed, right? The SaaS model versus everyone needing to buy iPhones and Macs and everything to.
So I guess the big question is whether or not Wall Street decides to sell off this stock too.
Probably
it's up right now, up to 160.
It looks like supply chains were not hurting them, huh?
Not a big issue.
Yeah, I got it up $4.
I mean, who's better at managing supply chain than Tim Cook? He is the guy for that.
Yeah, I kind of think companies come up with excuses every quarter. So it was like COVID one quarter. It's supply chain this quarter. It's like, so that way they don't have to say we suck. Because the truth is that Tesla executed beautifully, and now Apple just executed beautifully. Microsoft executed beautifully. Netflix seemed to have operated beautifully. So I'm sitting there thinking, supply chain woes, I'm sure they're real because I know
services grew 25% too. Like,
but
that's
good
great.
Companies figure out how to deal with these things, and that's what Apple's done.
Also, the iPhone became China stopped selling smartphone.
Yep.
Well, once we stop selling chips to Huawei or whatever, they don't.
They don't have to say that, like, oh yeah, we gave back $27 billion to shareholders this quarter.
That's peanuts.
That's a little bit more than us, but yeah, it's good.
But services grew 25% year over year, also really good. Like that's what gives Apple its 25 to 30 multiple.
Come on, services is such a gold mine. It's unbelievable. I mean, come on, I'm on my phone and I pay for these Roblox, and all I think is that Apple gets $3 of this. And I'm like, how the fuck does Apple get $3 of this $10 from Roblox?
You gotta pay to play, baby.
I know, but think about that tax. That's a big tax. And so
Apple, that's why they're all fighting.
Right. And Apple still seems to be winning.
0.55% dividend yield now too with what they just declared.
Look, I don't figure out dividend yield like that. The way you figure out dividend yield is say, when did I buy Apple? Okay. And what's the current dividend? Okay.
22
So
cents.
let's say I paid like 90% less than the current price for my Apple stock. So what's my real dividend? It's huge because it's risen so much over the years. Investors don't understand. Many people out there right now crying about their portfolios don't understand that rising dividends over time will definitely help your stock price. And it's that paying of capital back to shareholders that goes up that really builds the value of a company.
Since you're talking about dividend, Ross, I mean, obviously we've seen a lot of these tech stocks sell hard. Maybe we talk a little bit about why some of these valuations have come down for these stocks and have a dividend.
Well, it's not just dividends. A lot of them don't have earnings. So they not only don't have dividends, they don't have earnings. A lot of them are these kind of companies that grow really fast. Like we were talking about Lemonade yesterday because I really like this company. And this company has done a wonderful job getting young people to sign up for insurance. But they started with renters insurance, properties and casualties insurance. And there's very low margin. That's why we don't sell it at GK. And so when we looked at doing PNC, I was like, I don't want to do this. I don't want to do homeowners insurance and make no money. And so we just don't do it, you know. So Lemonade gets into the business, builds it online, gets all the young kids to sign up. But they have what we call customer acquisition cost. How much does it cost? Now, when we started our firm and we were doing a lot of online marketing, we knew what our customer acquisition cost was. And it was quite high. And we were able to monetize that over time in a way that made sense. Okay. But many companies aren't able to monetize this over time in a way that makes sense. So we don't know if Lemonade can be a profitable business. Now we know they're selling life insurance, which is what we do, which is a much better business than property and casualty. And they're doing a lot of life insurance on young people. But the question is, if I have to spend $200 to make $100, that's not a good business. Maybe at the start I can do this, but eventually I have to stop. This is the problem with DraftKings. So DraftKings, their actual business sucks because it costs them so much money to get a customer and there's no customer loyalty. Okay. Yeah. So when you look at businesses that might be tech businesses that are growing and have great revenue numbers, but the losses get bigger, especially if the losses get bigger, that means that they actually aren't a business. You see what I'm saying? They're paying people to use a service at a loss. But then those people don't continue to use the service. And that's a really not a business, okay? And so when rates go up and, you know, we start looking at valuations and we start looking at things like profits and dividends, and we start thinking about that I could get maybe 2% on a bond, you know, so the dividend yield matters more and the earnings matter more. And you get this PE compression. And that's what's happening in the market right now. So the S&P went from a 21, 22 forward PE to now about an 18.5 forward PE, which is exactly where it should be actually. Yeah. Okay. So if you start investing today, you're still investing in a fully valued market. It's just not overvalued anymore. Okay. Yeah. And in some places now it's getting undervalued if you look at the Russell 2000, for example. So small and mid caps, there's value. You know, you look at our Petco versus, you know, a high growth, you know, like a CrowdStrike, you know? And so it's like all of a sudden there's value. And so what we're doing as investors is we're saying, what's the PE? And if I don't have a PE that makes any sense, like, especially based off the growth rate, I just can't own these stocks in this market because price can keep going down, you know, until there's earnings.
Yeah.
Apple was $30 billion for the first time this quarter in earnings.
For the quarter?
$30 billion. $30 billion in earnings.
Obviously for them.
So one company after taxes.
So they're making $1 billion a day.
Over $30 billion.
No, it's $10 billion. Right, $10 billion a month.
A month.
Right?
Earnings.
$10 billion a month. Yeah. Right. $30 billion a quarter.
Yeah, exactly.
Okay, $10 billion a month.
300
and something million a day of profit.
That's insane.
Sell the news. Sell the news. Sell it off. Too good. Too good. Wall Street, sell. I don't know. I love our stocks. I don't care how cheap they get. I'll buy them. Tesla, Nvidia, Apple, Microsoft. I mean, these are winners, man. Just winners. So I love these numbers. What else you guys got for me? Any other companies we would bring up? Any other action? I know they kind of screwed up our big earnings show by moving all these earnings around now. Like it used to be, we would get like 5 good companies, you know?
Well, we have Blackstone, which is.
Did they report?
Not yet.
Not yet. We can do Blackstone. We own Blackstone's core holding. Love the stock.
Oh, wait, they reported this morning.
Yeah, Blackstone reported already. Yeah.
Oh, okay.
Yeah,
There you go.
They
That's how
reported this
busy I was.
morning.
What did they do? Because that's why it was up like $7 today or something.
Yeah, huge beat. 1.8 billion in net profits for the quarter. They increased their assets by $120 billion for the quarter. Sorry,
Sell the stock.
155 billion.
What's the distribution? What are they going to distribute?
Let me see. Distribution.
Sell the stock.
It says 1.71 in distributable EPS.
Yeah, 1.70.
Wow. I'll take it. I like Blackstone top holding in GK as well.
Fee earning AUM plus 27%, $650 billion.
So our stocks are down 19% so far this year, and every company that we own is killing it.
Crushing it.
Basically, Blackstone doubled their earnings, and they still built up that entire cash position.
I mean, if there ever was a company that is not in tech, that knows how to make people money in any market, whether it's real estate, private equity, I mean, that's Blackstone. I mean, they just do such an amazing job with all their assets.
I mean, Blackstone's one of the best companies in the world. Bottom line, that's why we own it.
5.76 billion, up from just 3.6 billion last year.
They're killing it.
Yeah,
I love our
doing,
portfolio.
They're so interesting in what they're doing strategically. I mean, it's not a real estate company in the private equity space. They buy Hello Sunshine. They buy Spanx.
Right.
Yep.
They music rights. They bought Hypnosis, which is for music streaming rights.
Yeah, they have their hands in everything. Yeah. And I believe it was 2 years ago.
Logistics centers.
Yeah, they started their own life sciences division.
That's right, too.
And what they do, they don't just invest, they go into these biotech startups and they basically hand in hand say, we will bring this to market and we won't take a dime until it goes to market. But they get these companies through regulatory.
And then they own buildings that the companies are in.
Yeah.
Yeah.
They're so smart. They're so
you know what it is? It's talent, right? They hired Kevin Mayer to run their entertainment division.
Kevin Mayer doesn't work for Blackstone. They partnered with Kevin Mayer.
They partnered with him, but
sorry. Go on.
He's doing all the acquisition for them. They got Fauda, the Israeli show. They got Hello Sunshine. So they're building an entertainment power.
So Schwartzman and the original founders of Blackstone are very old now. They're in their late 70s. And they've done a wonderful job with the company. But Blackstone was like a real estate company, you know, like buildings and this and that. And they hired these guys, and I don't know his name off the top of my head, but he's about my age, a little bit older, and he's a private equity guy. And he was the guy that started making these really good private equity deals for Blackstone a few years back that have now turned out into great investments. So they recently turned over. What?
Jonathan Gray.
Yeah. So they recently turned over the business to him, basically. And they're like, listen, it's your turn. And what they've done is they've pivoted into exactly what Wendy's talking about, more private equity, all kinds of deals in entertainment and biotech, you know, and just became a much more interesting and diverse company than just a solid real estate company generating great fees on products like Brexit, for example. I think Brexit is what it's called. It's BRICS. It's like the #1 property fund in the world. And it's for small investors all the way on through. And this thing has done well. You know, like we didn't sell it. We had access to it. But we just bought the stock because I was like, you know, I'd rather just take the fees off this thing. And as they put money to work, their fees go up. So as they fundraise, then they put the money to work and their fees go up. And then when they take companies public and sell, you get that profit. So Blackstone probably had a big distribution from selling Cosmopolitan, which they did to MGM for I think $1 billion or something. So really, Blackstone also has ownership stakes in many of the casinos we own in Vegas.
Didn't
So when you look
MGM
at-
sell Bellagio to Blackstone right before
Right.
COVID hit also? So they're just like exchanging properties to each other?
No. There's ownership and then there's management. So MGM used to own the hotel and manage the hotel. And then MGP was spun off as the ownership stake. So Blackstone partnered with MGP and bought like Bellagio from MGM parent. MGM parent now just takes a revenue cut, you know what I mean? And then they get paid their, 6% dividend, their rent. And so MGP, which is also a holding of ours, which I love, is really just the casinos themselves collecting rent, and Blackstone is a partner with them. So when you look at all their businesses around, they're in everything you need to be in. It's a diversified portfolio of wonderful assets, and that's why we own it. But their management and their team is just killing it. Once again, I haven't seen any of our companies report poorly yet. We're early in the season, but I'm happy with what I'm seeing.
Should we get to some questions from
let's take questions because there's not much more news, and I'm hungry as heck.
There was one that said, how much do you need to open an account at GK? We don't have investment minimums. So
head of Get Investing right here.
Yeah, so whether you're just getting started or you're more traditional wealth management or you're high net worth, we have a program kind of to meet you where you're at. And we're all about democratizing financial advice. So we don't turn anyone away. We want to help as many people as possible. Get put in.
That's my philosophy. It's like, how, all these firms, it's like, oh, after you're rich, call me. And I was like, well, that's a shitty way to do it. Why don't I show you how to get rich as long as you stick with us forever? And that's the Get Invested program. Brett's been running it. It's doing a great job. But if you're a young investor and you don't have a lot of money or just a little bit of money and you want to start investing, we have a program for you. And reach out, GerberKawasaki.com, and we're happy to help. Next question.
There's a contact form on there. You guys could fill it out. We'll give you a call, see what your situation's like, and hopefully get you to your goals quicker.
Yeah.
You can also help you have $50 million. So.
Yeah, if you have 50 million, we also talk to you.
We'll also help you.
Do we got another question, Mia? I see in the notes here that Alex is pulling his lasagna. This is a work from home issue. It sounds like a work. Is Mia pulling her lasagna?
Yeah.
So there's a question talking about.
I'm actually just gonna add myself to the stream.
That's
quite fast enough. I'm getting questions from Twitter, and it's too hard to type them fast enough to get them onto the stream.
Let's hear them. Let's hear them.
Just give it to us.
Okay, perfect. How low do you think Tesla could fall realistically?
How low can it go?
How low can you go?
I wish I knew the answers to all of the unknowns of the world, but I have no idea. If it goes lower, I will buy, and I will buy until I am out of money. So I don't think it's going to go that much lower.
Okay, another Tesla question. Any thoughts on Tesla's increasing margins, giving ability to cut car prices to spark consumer sales?
Nobody's cutting prices at Tesla, and no sales problem.
Yeah.
You don't cut
prices are going up.
You don't cut prices when your product is so in demand that they can't make
margins going up. Prices going up. Yeah.
Okay, we have some more YouTube ones that I can put in now without me having to interrupt the stream.
No, I like you interrupting. I know
let's do the Metaverse.
I know you wanted to prove you weren't making lasagna during our very important show.
I finished my lasagna, so
that's okay, Mia. That's okay. You got to eat. You got to eat.
Yeah, lucky me. I'm behind the screen, so I did get to eat.
What do I
think about Facebook and the Metaverse? So first of all, I hate Facebook, and I don't think consumers should trust Facebook, especially with direct access to your brain and senses. Considering what they've done to our society today with the horrible issues they've created for people, from socialization issues. I mean, boy, we were in a club on Saturday night. I almost cried for the younger generation, for the damage that Facebook has done in creating such an antisocial behavior pattern with the phones. And the phones really aren't what's bad. It's really Facebook and social media and Instagram. And we've seen direct correlations to quitting Instagram and being much happier. So the thought of them trying to control the metaverse and what that metaverse would become is scary to me. So if anything, I think we should try to prevent them from having access to people's minds and brains. For sure.
I don't think anybody is going to own the metaverse. Facebook is trying to. This is just a rebranding.
Well, there'll be different platforms.
Well, they're investing the most in it right now, right?
They're trying
earmarked $10 billion.
No, Microsoft is investing even more when you think.
Now, Microsoft, actually, a lot of
Microsoft is the metaverse already.
A lot of Microsoft's talent from HoloLens is actually being poached by Facebook, and there's an exodus there. So while I agree with you, we shouldn't let Facebook be at the forefront of this. They are, as much as we'd like to admit it.
Yeah. They changed the name of Oculus today to Meta Quest. So
no.
They did.
No. Did they not go to branding school?
Yeah. They're trying to rebrand. That's the point. They're trying to rebrand.
Oculus is a brand that's good.
But it's a Facebook brand.
Is a brand that's bad.
But everyone knows it.
Meta is a brand that's bad. Oculus is a brand that's good. I don't get this. It's like Square. Look at what Square did to the fucking stock once they changed their name. I'm looking at my portfolio. It goes block. Oh, Block is a piece of shit.
Well, that's Apple, right? Apple is going to get into the Square business, and they're done, right?
No, Square's got a great business, and Square's got an ecosystem, and Square's got a founder who's just crazy. I mean, come on, it's great. It's great.
Okay.
I still like Square. The stock's gotten hammered, but they got a lot of stuff going on.
But what I think would be great is that we should take responsibility of oversight of Facebook away from the people at Facebook.
Yeah, agreed.
Never happened. That will never.
Social media. Why should they not be regulated like other media? That's always been my question.
FCC should be calling them tomorrow.
Totally. Like, why?
Just have their own real profiles on there. It's like, if you take away the trolls and you take away, all the fake accounts, first of all, you'd see some actual real data of how well these social medias or companies are doing. But then you also bring an accountability, right, to what people are posting online, what they're influencing other people's decisions and everything. There becomes this whole layer of accountability.
Right.
Yeah.
So I don't know. That's what I think the fix is, but no one's ever going to want to do that because all of these social media companies, Facebook, all the video game companies, all these bots just boost their numbers. It boosts engagement and ultimately boosts the money that's in their pocket. So
yeah, for sure.
Somebody has to do it from outside.
Yeah, guys, I think there's this insidious cancer in tech companies where you have really two groups. You have groups of companies like Apple that really try to take their responsibility seriously because they do have access to just tremendous amounts of our lives. And then there's companies that abuse this data and stuff like Facebook. And I think companies fall on both sides of this category. Companies like cell phone companies like T-Mobile, or who knows how corrupt, with the hacking and the SIM card bull crap all behind the scenes. Yeah, I don't trust them at all, And then there's companies like Apple where I trust them and they have access to so much information. And I think Apple kind of drew the line, like we're not going to be nice to Facebook anymore because they screw everybody and it kind of screws us. And Microsoft kind of falls on the Apple side. I think they're responsible users of our information. I could be wrong, but that's the way I perceive it. So
let's get another
this trust is big, like trusting your digital life on Instagram, for example. They just turn it against you.
There was one question that's easy. Can you manage IRA accounts that are at Schwab? Yes, we can manage most types of investments.
You got to do something more exciting than that.
Otherwise I got to eat. There's a couple of Canada questions. I know we have some issues with the ETF for accounts in Canada.
Yeah, Canada has.
I am so tired of Canada.
Yeah, they have their own.
Tired of Canada.
All right, I can talk about that.
Canadians. If you're a Canadian, okay, I'm getting a lot of people from Canada who want to work with us. Yeah. There's something really screwed up with your country. We can do business with Honduras, but we can't do business with Canada. There's something with Canada we can't.
We can still build financial plans, and we can still.
No, stop it. Canadians deserve the same money management as people in Honduras. It's absurd. Hatem's head of our international division. Hatem's been dealing with this issue. What is the damn issue with Canada?
The regulators in Canada do not allow outside investment advisors to manage assets for Canadian citizens. And no matter what we try to do, they will not even allow us to.
Isn't Caitlin Canadian? Can we have her do it?
She's U.S. citizen, though. She's U.S. citizen. And also, they won't allow our ETF. This is actually the same thing for France, for Italy, but we can manage money for Venezuelans. So go figure. It's really unfortunate.
You should be rioting in the streets in Canada. But you can't work with GK. You guys, this should be like the vaccine protests. That's what we need in Canada. So if you're a Canadian investor, you should get out in the streets right now. Is Trudeau still president of Canada, or is he just hiding?
Yes, he just got reelected.
Yeah. Oh, he did.
Yeah, that's not good. Very popular.
No. And I said, yeah, him and Macron could like have a party. No, and I'm sitting there thinking, why is Canada so messed up? It just doesn't make sense. I like Canada.
It's another one about Enphase, Ross. How do you feel?
I love
about
it.
With their
love the company. We own Solar Edge. Enphase is a Canadian company, I think, isn't it? I think it is. But I like inverters, and I like both companies a lot, and they're cheap now.
There's another one that says, did driving Lucid with Kevin change or confirm your opinion on the car or company?
It confirmed my opinion of the car being sweet. I liked the Lucid when I saw it in the factory 2 years ago, and I've been waiting to drive it, and it drives well. You know, it's cool. You know, I like it. I'm not the guy that's going to buy that car though, because I got in my Plaid today, and I just was feeling super aggressive on the road today, and that car rips like crazy. So I'm not really ready for like the boomer Bentley feel car, because I'm still like a young guy, you know?
So the market for the market for the Lucid is your boomers. Is that
it's boomers. It's like your 60-year-old buyer who wants a Bentley. It's like a Bentley, and it's super nice. But see, like for me, being part of the younger generation, I like the technology. And so when I can push a button and the car drives me, I like, yeah. And the fact that Plaid is there's no tech. There's no tech. Yeah. It's just a car. So then,
So then that defeats the whole purpose of having a new car, basically, that's supposed to revolutionize.
No, it's an EV. It's an EV.
I get that, but again, the whole point of, if you're going to make a next generation car, it's got to be tech focused also. And I know they have the battery.
That is if you want to appeal to younger people. But remember, they're not trying. You got to have 200K.
You can also probably help out with too is opinions on online fashion retail, because I know that
like Revolve.
Revolve.
I know Revolve. I know Revolve, and I traded that one wrong. They went public, and it kind of went down, and I was going to buy it, and I didn't, or I bought it and I sold it because it wasn't going anywhere, and it's done well. I think these are decent companies. I think they're company specific. Women shop on these sites. I think fashion's one of the hardest businesses in the world. However, it constantly changes.
When you shop online.
Me personally?
No, Wendy.
Oh, Wendy.
The big ones are Real and Poshmark.
Right.
Poshmark, I'm hearing a lot. Like,
yeah,
honestly,
me too.
Like, whenever I hear girlfriends or whoever, like we're talking to, my sister, like whatever they're buying on their phone ends up being a great investment. Like,
I like how you said girlfriends. I like.
We have girls that are friends.
Oh, your friends. Okay.
Yeah.
No, Poshmark I've been hearing a lot of, and women are pretty. No, but women are pretty loyal, actually, shoppers. If they like a site, they like a product, they tend to stick with those. I just don't know. It's like those companies aren't really profitable, though.
Yeah, I have a large position in Poshmark for a client who was an early investor in the company, and unfortunately, the stock is down 80%.
Ouch.
They missed earnings several times. Growth is not exciting. It's just been a tough ride. I think they've been private for a long time, and they come out at the wrong time too. So,
yeah, I just think
it's hard to get new users. I think that a lot of sellers on either Poshmark or Real really drive their sales through Instagram.
Yeah.
So
Absolutely.
they have to
Absolutely.
curate really well to drive business. But Poshmark or RealReal, any of the companies are at the whims of how many people want to sell too.
Well, there's
Yeah.
that element if it's user generated sales, and then there's the element of what people are buying and selling being what people want, and
Right.
so
But I do think that they have an advantage trend wise because younger people are very much into sustainability. And one of the big tenets of sustainability in fashion is to rebuy old products.
right. Well, isn't that like the Rent a Runway kind of stuff too?
Yeah. I know people who use Rent a Runway.
I see those are things like I look at those and I go, yeah, it's a great idea. I don't know if I want to invest in that, but like it's certainly a great idea.
None of them have been great investments.
My wife taught me this lesson when early on because she worked in fashion for a brief bit and then she's been working in beauty since. And she was like, fashion, real hard, always changing, beauty, high margins, people never quit their products, And I was like, beauty sounds pretty good. And she got me into Ulta early. And Ulta ended up being a great investment.
Ulta is amazing.
Yeah, it's been a great investment. And I sold it a couple years back and I still like the business and I still like the beauty business. And most companies don't do it right. Like Coty and all them are kind of struggling. But boy, if you do beauty right, like my wife's company, it's just like nice margins, profitable, and people reorder and reorder and reorder.
Yeah.
So I'll take beauty over
Apple. How do you think Apple might take over Square's business with the addition of Apple Pay tap to pay feature that they're developing? Does anyone know anything about that?
Once again, I think that people use different checkout things. I think Square's business is under attack from companies like Toast. Small retailers was kind of their core business, and now they're moving into like cryptocurrencies and the Cash App. So
I would have thought Visa.
If there is a way, Brett, if there is a way to use NFC to basically pay for things without having to use a Square thing, I think that's going to be a big.
That's what we've had that.
Yeah,
though.
I mean, we've had that kind of.
It's
and
not
like
changing.
You walk up and you just use your Apple phone to pay for shit.
I don't think.
And
I don't think Apple takes their business. I just think there's more business for everyone in the future. I think.
Yeah, and I just don't love that business either. It's sort of like
I agree. But
I
see street vendors using Square Pay now, like legit. Like since the pandemic started, this contactless payment has just gone up for everyone. So I think it's a rising tide that's ultimately going to lift all these boats.
Yeah, and I don't think Apple's done much other than basically let you pay and use their credit card. So Apple probably makes good money off the credit card fees they're making with Apple Pay and the Apple Card. But I look at Square as an ecosystem that involves commerce and crypto and the intersection between commerce and crypto. And that's why I like the company, because I think Jack does have a good vision for that. That being said, his naming company stuff is horrible, and I don't know why he changed the name. And what is it? MetaQuest. I got a MetaQuest headset. I can't even say it.
MetaQuest, yes.
I need a MetaQuest. It sounds like I need a doctor. I got
Solana had almost executed just as many or settled as many transactions as Visa in the last 6 months. It's kind of crazy.
Who did?
About Solana blockchain. Basically settled as many transactions.
But how many of them were for goods and services? Zero.
0%. Don't know the actual breakdown
I'm
of
telling
it.
you, 0%. Nobody bought anything with this.
Is an NFT a good?
No, it's not. It's not a good.
I don't know. Don't tell NFT Brett that. He's going to be very upset.
It's not a good. An NFT is.
Here's another one about the Fed.
Why isn't it a good? It's a digital
good
thing.
It's a digital good. What's a digital good?
It's exactly
a good that doesn't do anything. It's a good that doesn't do anything.
I've failed you, Ross, with trying to get you into.
Well, then the internet is not a good or a service, right?
Listen, there's nothing that I love more than art, but not Facebook. Like,
we're
talking about the Jimmy.
Hey, get in your Lucid.
Did you guys see the Jimmy Fallon thing where Jimmy Fallon bought a Bored Ape for $200,000? I guess. So he had Paris Hilton on the show the other night, and he was like pitching his Bored Ape. And it's against the policies of NBC to like pitch a product that you own that you could profit off of. But they're like, now that he talked about it on the Tonight Show, it made his ape more valuable because it identified him as the owner, and now it's a famous Bored Ape. And so he's kind of in trouble now with NBC over this, you know. And I'm sitting like, this idiot paid $200,000 for a Bored Ape, and they're worried that it's going to.
Yeah, it's a
Well, I
marketing
think
thing.
a lot of these celebrities are going to be in trouble with the SEC for promoting
0%. 0%.
I agree with Ross. I agree with Ross.
Really, you don't think so?
0%.
They can't throw people.
There's 4 people there. Okay?
They can't get
and
anybody
all 4 of
who
them are busy as hell, just trying to get.
Yeah.
Well, they're trying to deal with what is that? Ripple. They're still trying to deal with Ripple.
Yeah.
And get people off XRP. You know, let alone NFTs. They can't even keep up. You know, the fact that OpenSeas is allowed to operate is kind of a joke. It's literally a trading platform for digital fake stuff, and there's no there's securities. I mean, it's like, how is this not regulated? Who cares?
Well, we run well over an hour now. I don't know if we want to take a couple more questions or if we want to send everybody off with that.
The time is up. The gig is up.
Let's leave it. The earnings are good. Let's leave it with that. Earnings have been good. Okay, so don't worry about what the market does right now, right? Like the earnings have been good.
Well, why don't we have our wise woman of the group give us some wisdom? Wendy, what do you tell your clients in times like these?
Corrections are natural. Earnings are good. Our economy is doing well. I think we have not that much to worry about. We do have interest rates, you know, coming up. So people act emotionally, especially when it comes to finances. That's just the bottom line. We are all emotional people.
Yeah.
And it is our job as professionals to manage those emotions, but it is natural to be emotional about it. It's your money.
Yeah. And so, you know, the way you feel right now, looking at your account might bring you down. And I get that. And that's why we're here as financial advisors to talk about it, to help you refocus on what's important, like getting out there and getting a raise and working hard because it's a great economy, ways to cut expenses that can increase your savings in times like this so you can invest more when stocks are down. So there's lots of things you can do other than focus on the day-to-day values of your account. I spend very little time doing this. I've lost money just like everybody else, but I don't care. I do care, but I don't focus on it because there's nothing I can do about it. And I'm not selling my Tesla, Nvidia, and Microsoft and Apple and whatever. You know, I'm just not selling them. So it doesn't matter. So I'm out at work and I want to make some money and I want to buy some more stocks with my savings. And that's what people should be thinking about instead of kind of crying about the fact their accounts are down right now. And they should be taking a lot less risk because clearly if you're that stressed out, you were taking way too much risk. And that's another thing financial advisors like our team here can help you with. So, you know, reach out, GerberKawasaki.com. We're here to help. That's what we do. That's why we put on these shows. It's really just to give information to people because there's so much bad information out there. We're trying to give you directly the information our clients get and our investors and the media that we deal with gets. I want to thank our great team. We had Wendy, Ayal, Brett, and Hatem on today. Just a huge depth of advice. I mean, I think the group here totally managed about $600 to $700 million just on this screen at our firm. I think Brett's the weakest link here.
Wait, I thought we decided we managed $1 billion, but maybe today it's not $1 billion.
Yeah.
Well, it would be 995 million. Is it $1 billion between all of us? That's pretty sweet. So you got $1 billion of assets under management just on this screen right now. So we control a lot of money. We invest a lot of money for people. And we have a lot of experience combined. And so when you have a strong economy and rates are going up and things are good, this is not a market you should be too scared of. But it's also one you don't want to be too aggressive in. So, you know, bide your time, make some smart investments, and we'll talk in a year, and I think you'll be pretty happy. So thank you, everybody, for tuning in to another Big Earnings show. Hopefully we'll find next quarter a day where there's more than just Apple. You know, it's kind of weird how they keep changing this on us. But we've seen great numbers from companies so far, and I suspect we're going to see a lot more great numbers moving forward. So I'll leave you with this. I can't remember the last time I saw GDP in this country at 6.9%.
Nope.
It's unbelievable. It's unbelievable. These are like China numbers, okay? But they're real. That's the difference. So have a great day. America's growing. Things are good. Enjoy life. It's short. And if all you do is focus on money all day long, you're never going to be happy. So anyways, have a good one. Build some financial security, and we're here to help.